Welcome back to another video, everybody. We have a lot to talk about as we kick off this week here. Sorry for the lack of videos over this weekend. It's my birthday today and it was Memorial Day weekend, so I was very busy, but we are back now. We have some very interesting statements from Tom Lee kind of outlining what we could see over the next couple of weeks here as we get into these summer months, and we have a lot of very interesting, not only movement out of these individual names, but also some critical pieces of news out of some of your favorite tickers here that we absolutely have to break down. So before we get into all of that information, guys, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos do end up getting posted live. And again, with all the volatility that we are seeing in markets here, there is a lot of opportunity out there for those of you guys that are taking advantage of that volatility here through day trading. Again, make sure that you guys are taking advantage of that 90% off sale with Apex Trader funding. If you guys are interested in that, getting up to $6 million in funding to trade with, make sure you use code VIX with that link down below. But without further ado, let's roll this Tom Lee clip and start breaking everything down.
But here's the reality. Investors flip bullish as soon as you make an all-time high. So in other words, investors generally fight after a decline, they'll fight the rally until you make a new all-time high. So basically what happens? Well, at a new high, they turn around and become bullish. And I think that that's going to happen, that as soon as markets make a new all-time high, they turn bullish. And here's where things stand today. We're more than 17% above the lows and only 3% away from the highs. So it won't take a lot for investors to turn bullish if we can reattain that 61.47. So is there firepower to drive this? Yes. For instance, in the latest Bank of America Fund Manager Survey, the U.S. stock market is the most consensus underweight. In other words, most fund managers agree to underweight the U.S. Well, that's a contrarian signal to me, because when they're all underweight U.S., that means that you've priced in a lot of bad news. Similarly, hedge funds have increased their short futures exposure on stocks at the fastest pace in more than a decade. Again, to me, that's a contrarian bullish signal, because you've already seen people position for stocks to fall. And I think at a minimum, this keeps pullbacks shallow in the stock market. One of the leading indicators for stocks is Bitcoin, and Bitcoin hit an all-time high this week and it's continued to power through that. So Bitcoin's prior all-time high was January 2025 at 109,000. And on May 21st, Bitcoin made a closing high above that level and has continued to power higher. I think that's a leading indicator for the S&P, because Bitcoin peaked about a month before the S&P did. And they're both being driven by the same thing, that global liquidity is increasing. And this tweet by Raoul Pal really highlights the relationship between Bitcoin and M2.
Now, one of the most important things that Tom Lee is talking about in that clip where he's talking about his macro perspective here is kind of overall positioning. We've talked about this a lot on this channel, that there was in 2024 a very high level of concentration from foreign investors in U.S. assets. And in the first quarter of 2025, with all of the uncertainty and volatility that we were seeing, well, that money started to flow out of U.S. markets. Now, it could definitely come back. But again, even those hedge funds are positioned still net short here, and a lot of the leverage has been rolling off. Now, what that provides for is an opportunity for all of this leverage and increased buying to start coming back on. Now, what is it going to take to actually get that buying pressure coming back in? Well, this is one of the things that could bring it back in here. Some increased and also further progress on these trade developments. So as we saw recently, we did see Donald Trump come out and say that he was looking to slap 50% tariffs on the European Union because those trade talks weren't going the way that they hoped. But recently, again, over the weekend, we saw Trump grants extension to European Union on tariff hike. And obviously, markets viewed this very, very positively here. Again, over kind of that Sunday trade trading session yesterday when futures were open, and today the overall market here, the S&P 500, is up about 2% since Friday's close. Now, we are also seeing some very positive developments here in the bond market as well. You were seeing so many talking heads, and this is something that we talked about on this channel over the last couple of weeks here as well. So many people saying that yields were going to continue to go up. It was going to cause some significant problems in the system here. Again, guys, when you start to see everybody talking about one thing happening in the market, it is very likely that that part of whatever cycle we are in is starting to come to an end. Now, yes, yields could start moving back to the upside, but further progress on these trade talks and developments here could easily, again, cause more money to fly back into U.S. assets, into U.S. debt here, further pushing yields down and bond prices back to the upside. Now, it's not just foreign investors that are starting to have a little bit more confidence in the U.S. as well. It's actually U.S. consumers here. This is, again, something that we've been speaking about, that it was very likely that in the near future, we were going to start to see consumer sentiment and consumer confidence start to inflect and move back to the upside here. The previous reading on consumer confidence was a reading of 86. The forecast for this time around was 87.1, and the actual number that came out, 98. A massive beat on these consumer confidence readings. And as you can see here, we're just kind of looking at this on the chart. Consumer sentiment, which I've showed you guys a lot, and that is when we get those one-year inflation expectations, has started to bottom out here, but consumer actual confidence here is starting to inflect to the upside. The one thing I will say, though, is that when we're thinking about consumer sentiment and consumer confidence, is take that data with a grain of salt, because even though we have seen consumer sentiment fall to levels that we have not seen since the lows of 2022, it really has not changed consumers' purchasing behaviors, which is effectively what you're using consumer sentiment and consumer confidence to forecast here. So while it is good to start to see some of these readings move back to the upside, and we could see increased levels of consumer spending, because again, that is going to drive GDP significantly. Consumer spending is about 70-75% of overall GDP every single year. Well, we didn't necessarily see that move to the downside, so the only thing that could really happen now is consumers feel a little bit more confident about the overall economic situation moving forward and feel more comfortable going out and starting to spend money. Now, let's get into a couple of these individual names here, and these are all names that Tom Lee holds in the Granny Shots ETF here, which, congratulations to them, has now reached over $1 billion in assets under management. So the first one that we have to talk about here is Palantir. Now, remember, this is one that the market is going to hold to a lot higher of a standard, even though during its recent earnings report, they showed unbelievable amounts of growth, really breaking records on that Rule of 40 metric, and are continuing to get unbelievable contracts in the commercial and government sector. But again, when we take a look at this here, we are going to need to see Palantir grow into this new valuation here, because in my opinion, it is a little bit too aggressive. Now, this does not mean that I am going to go out and just start randomly shorting Palantir, but what I will say here is this is a name right now that I would be a little bit more cautious of. You could be cautiously optimistic, but this is not one that I would be looking to be making big buy orders or initiating any short positions in the meantime, because again, this is one that retail and the overall market is very, very proud of over the last couple of years here and continues to show a lot of love. Now, this new contract is very interesting that Palantir just received. For years, Palantir has benefited from the defense contracts as the US government has recognized the military applications of its technology. In recent months, however, speculation has risen that Palantir founder and chairman Peter Thiel's ties to Elon Musk serve to help the company procure even more federal partnerships. That certainly seems to be the case, even as Musk prepares to scale back his work with the Department of Government Efficiency, DOGE. The Pentagon has revealed that it will significantly increase the budget for Palantir's Maven Smart system to $1.3 billion over the next 4 years, an increase of roughly $795 million. So Palantir keeps showing time and time again that it is doing everything it needs to as an organization to continue growing. Just the marketplace as a whole has gotten a little bit ahead of itself in the valuation, in my opinion, that it is currently commanding in the marketplace. Now, the next one that I want to talk about here is Tesla. Now, for those of you guys that have been paying attention to all of the videos that I posted over the last kind of week or so here, and especially for those of you guys in the Less Trades, More Profits community, remember, if you guys want to hop in there, I am still running that absolutely insane deal, 50% off your first 2 months to hop in there with us. Again, use that link down below and use code MAY. It literally only comes out to $1 a day there to join that private trading and investing community. It is super highly reviewed for a reason, guys, but more on that later. When we look at Tesla here, this is an absolutely textbook setup. When we start to see stocks move to the upside, start to consolidate right into these 10 exponential moving averages here, it is more often than not that we are going to see aggressive breakouts to the upside, and that is exactly what we saw out of Tesla today, and that coincides with Elon Musk coming out here and tweeting this: back to spending 24/7 at work and sleeping in conference, server, and factory rooms. I must be super focused on X and XAI and Tesla plus Starship launch next week, as we have critical technologies rolling out, as evidenced by the X uptime issues last week. Anybody on Twitter or X kind of noticed that there were some issues going on. Major operational improvements need to be made. The failover redundancy should have worked, but did not. Throughout the beginning of this year, there's been a lot of concern from investors at how active Elon Musk has been in the political landscape and his kind of lack of involvement or lower levels of involvement in all of the different companies that he is running. Now, when he comes out and starts to say, okay, I'm coming back to these organizations here, and a lot of why people were purchasing these companies in the first place here and investing in these names was because of Elon. Well, having him back really fully at the helm is going to give investors a lot more confidence moving forward. Now, again, it is not all just good news with Tesla here and some of the other names. When we take a look at some of the sales and registrations coming out of Europe here, even though Elon Musk did say last week that they weren't really seeing any problems in these delivery numbers, per the European Automotive Manufacturers Association, Tesla EV registrations, a proxy for sales in Europe, fell a whopping 49% in April compared to a year ago to 14,228. Meanwhile, overall electric vehicle registrations in the region rose 34.1%. So what that effectively means is it looks like Tesla is losing out on this new electric vehicle market growth here, which is not what the market wants to see at all. Now, currently, the equity market is not penalizing Tesla for this, but if this continues to be a problem, again, Tesla is not going to be able to meet some of these lofty earnings estimates here that the market and Tesla's management has laid out for it. Now let's shift gears here and start talking a little bit about the semiconductor and chip and kind of overall AI space as a whole here. And we're going to first start by talking about AMD here. Again, this is one that we've been talking a lot about on this channel. We did see the retest of this area here that we were talking about after AMD did run up to that 200 exponential moving average here on this daily time frame. Remember that new partnership with Humane, the new share buyback, the selling of the manufacturing side of ZT Systems, and everything else that AMD continues to dominate in are, in my opinion, going to continue to propel this one growing forward at a pretty significant rate here. I think even now, even after we've bounced very significantly off of these lows, again, depending on how the overall market wants to react to a lot of the tweets, anything the Fed says, or any other big developments that we do end up seeing, I think AMD is still at a very, very attractive spot to either add to your position or initiate a position if you do not have one already. But again, nothing I say in these videos is financial advice. Make sure you guys are doing your own research here. You should never be listening to any individual YouTuber blindly to make investment decisions. Now, moving on here, let's talk a little bit about Nvidia. Nvidia is going to be reporting earnings after the bell tomorrow. Now, even though a lot of you guys that are in the Less Trades More Profits community or have been following along on this channel a lot, again, Nvidia does have a very, very bullish chart setup right now going into earnings. Now, what most retail investors will do surrounding any one of these large earnings events is they will take a lot of short-term gambles here. Guys, that is not a repeatable process. It's not a repeatable strategy. It's not going to yield repeatable results. And it's not something that I think people should be doing going into any really binary event here, especially one that could be as volatile as Nvidia. And with that volatility, especially if you're in the options options market that is all going to be priced into the option chain, and I hope that you guys don't have to learn the hard way about implied volatility crush after a company reports their earnings. So please be careful here. I hope nobody is doing anything quite honestly stupid going into any big earnings events, but there are a couple of things that we need to talk about with Nvidia here as we get into their earnings. So with a lot of what's been happening with this new administration here, with some of these chip export controls and all the other things of that nature here, again, Nvidia has said that they are going to be launching a cheaper Blackwell AI chip for China, which again could kind of calm the market a little bit, even if they start to talk about in their earnings this recently restricted H20 model that they are no longer able to sell in China. Having this new kind of weaker and cheaper Blackwell to offer these Chinese businesses here could easily be something that investors view positively, and just another hurdle that Nvidia is going to be able to get over in order to keep crushing it. So again, in general here, we have a lot of individual names, Tesla, Nvidia, AMD, a lot of some of your other favorite names that we didn't talk about in this video, and the overall market setting up for some very, very bullish moves moving forward here. Again, that is all going to depend on kind of the nature and the results of a lot of these new trade talks. And again, with Nvidia reporting earnings after hours tomorrow, the market could definitely see some increased volatility because of that. But seeing this movement in the bond market today and kind of the overall movements of these individual names should give investors a lot of confidence moving forward over the next couple of weeks and months here as we get deeper into the summer. So that is going to wrap up this video, guys. If you did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos go live. But until next time, guys, I will see you. Peace.